From my perspective, mutual funds are dead. ETFs are the way of the future. I don't see ETFs ever being displaced as the investment vehicle of choice for Canadian investors.
This is BTV Business Television. Discover companies to invest in.
This week on BTV Business Television, the $10 trillion Exchange Traded Fund, or ETF, market. Hello, I'm Taylor Tone.
And I'm Jessica Kachachek. Welcome to BTV Business Television.
When equity markets experience some turbulence, like they're tending to be doing now, investors look for more security. In September alone, Canadian ETFs added $1.9 billion, led by the creation in the fixed income category.
BTV was recently at the Inside ETF conference in Toronto, where we gathered intel. On today's show, we share insights on the world of ETF investing from some of the top experts in the industry.
But first, what are some of the benefits of ETFs?
An exchange-traded fund in Canada is still a Canadian-domiciled mutual fund trust. It just trades on the exchange like a stock, which is great because it allows the end investor and or the advisor or the institution to get instant access on their platform, whether it's through their direct investing account or through their advisor that they work with. Obviously, accessibility is key. The second thing, obviously, from an ETF perspective is it's extremely liquid, very tax efficient, and for the most part, very low cost relative to other traditional strategies that end investors have sought and used as investment vehicles in the past. The technology, if you will, is being embraced by investors of all types. And even in markets like we're seeing today, the growth in ETFs is still really strong. So we're still in net positive growth in the ETF vehicle here in Canada.
Emerge is one of the few ETF companies with a female CEO at the helm, which she believes gives them a unique perspective and insight into Emerge ARC ETFs.
Emerge is about asset quality by experienced portfolio managers actively managing, doing fundamental research, in cases like ARC, combining thematic analysis, but deep research and proven discipline management even through tough market times. So Emerge really stands for exceptional investment management capability, just happens to be by a diverse group of women portfolio managers from all over the world. We believe that active management, where you have true stock selection based on fundamental research by an experienced portfolio manager that's proven they can stick to their knitting in the worst of all times, is what we need right now. And so I'm very confident that our portfolio managers, who all are extremely seasoned, this isn't their first recession coming up, this isn't their first market downturn, they know what to do and they can stay the course.
A common phrase is that, the new market leadership emerges during times of turmoil. And that's exactly what we're looking for in these portfolios. Where are the market leaders? What is the new way of doing things? Who is set to take the most amount of these industries that in some ways barely even exist, or that the market has significantly underestimated because we're trapped in this linear world? And we think that all investors need some exposure to that, probably now more than ever as their portfolios have faced challenges.
With a focus on undervalued and disruptive technology, Evolve sees itself in the right place.
We've been in the market for 5 years and we've grown to $3.25 billion in assets during that time. And we really started the business 5 years ago because we thought there was a massive hole in the ETF market for investors to find solutions for things that were not being well covered through the standard index approach that a lot of other ETFs took. So we've really planted our flag and built our brand around disruptive technology investing. We're the first in Canada with a cybersecurity ETF, CYBR. We were actually the first in the world to bring automotive innovation into an ETF format with our Cars ETF. And then since then, we've launched video games with our Hero ETF, data centers with data, and we have one called Edge, which encapsulates 8 different disruptive investment themes. And here, the thesis is very common across all these products. Data is the new oil, and disruptive innovation comes from technology. And so In this case, we've got products for investors who want more growth out of their tech allocation. We heard from a lot of investors when we started our business that they were overweight the big tech companies, but underweight the growth because of just how big the large cap tech companies had grown to. And we went and saw that there were some sectors of the market where growth dynamics were really underappreciated by investors. And that's where we built these products, and it's what people are using them for, is to really put some growth back into their technology investing.
You heard it here first. Data is the new oil. With the rapid growth of new and exciting technologies, Evolve's innovation and focus ETFs are trying to help you find the next big thing.
Strategy and technology are two core concepts of the ETF industry. Javelin's William Trout tells us how connected they really are.
Javelin Strategy and Research is an advisory firm that does research at the intersection of strategy and technology in financial services. I think we're at an inflection point in our industry whereby wealth managers are tasked with delivering more and more from an increasingly demanding client base. Clients, meanwhile, particularly younger clients, millennials, expect more from their financial advisors. The only way to reconcile that dual challenge, or to sort of untie the knot, if you will, is through technology. And the firms today are very focused on bringing these digital tools, state-of-the-art technologies to the market and deploying them in a way that makes sense, again, for all stakeholders, for the financial institutions and also for the end investor. A lot of these new solutions are emerging and have only been around for a few years, and I think it's important to have a steady hand at the wheel, and a trusted financial advisor can do a lot to keep you on course, even in the most volatile market environments.
By merging strategy and technology, Javelin hopes to show the value that a forward-looking advisor can have on your portfolio.
Coming up next.
From my perspective, mutual funds are dead. ETFs are the way of the future. I don't see ETFs ever being displaced.
I think that the bigger trends that I pay attention to, because I'm involved through various positions in regulatory reform. So what you're seeing is that there is a trend towards professionalization of financial advisors and services around the world. We've seen more regulatory reform hit us in the last 3 to 4 years, and more coming than we've seen in a long time. How we work and what we are expected by law and by regulation to deliver to clients, that bar is increasing every year. Not at a rate fast enough for some of us, but too fast for others.
TDAM is a leading asset manager in Canada and a subsidiary of TD. For some, working with one of Canada's big banks opens up a large number of services, all within one financial institution.
I'm seeing, in particular, investors of all types really starting to embrace ETFs, and particularly in this market, because they can essentially get the exposure in a single ticket to help play defense and obviously take advantage of market conditions. For some, it's not bad to start off and do your research and do some investing on your own to get a sense of what your risk tolerance is, whether you can handle the ups and downs that the market presents to you. Obviously, there's also some great tools in the ETF vehicle that are that set it and forget it type of strategies. I mean, we have 3 in particularly from TD Asset Management, our one-click ETFs that allow you to do that. You buy one, it's an ETF of ETFs, it's a balanced portfolio in the case of TOCM is the ticker as an example. And that's a great way for a client, particularly starting out with a smaller account, to set it and forget it. So don't peak once you've made your investment, just dollar cost average in over time. But once you've generated a significant amount of wealth, and that is all very much personal to the individual, then it certainly is helpful to work with an advisor. It's not just about the investment, it's about the financial plan, it's about looking at the goals, it's about managing taxes and the location of those investment vehicles. And so there's a lot of complexities that grow over time as our life gets more complex. So I think there's a prudent way to invest in any vehicle, never mind an ETF, but certainly in an ETF strategy. A one-click solution is one way to start out.
TDAM offers an online resource center so you can better understand ETFs, and they can help you achieve your goals.
Horizons is one of the oldest ETF issuers in Canada, and they contribute their continued success in part to their ever-evolving ETF lineup.
Horizons is the fourth largest ETF provider in Canada. We're the largest independent provider. We manage approximately 25 billion of AUM in ETFs, with over 100 ETFs listed in Canada. Our thematic lineup is extremely diverse. We're in all sectors. You know, we were the first inverse Bitcoin ETF. Our product suite is extremely diverse. We have an ETF for that. And that's pretty much covers the gamut of the ETF industry. Things are exponentially growing here. You know, from my perspective, mutual funds are dead. ETFs are the way of the future. I don't see ETFs ever being displaced as the investment vehicle of choice for Canadian investors. We just have a lot of fun in doing what we're doing every day. We strive ourselves on being innovative, providing new products to investors, and most importantly, giving you, the Canadian investor, access to whatever asset class, theme, or underlying commodity that you can think of.
As new industries emerge, market-specific ETFs are becoming a growing part of Horizons portfolios.
The Royal Canadian Mint has their own spin on ETFs called ETRs, with something that many investors seek: direct ownership of gold and silver.
The Royal Canadian Mint has exchange-traded listings for gold and silver. We've always stored precious metals for over 100 years for large banks and institutions and the wealthiest of families. But with our new ETR, anyone can have access to physical gold or silver stored at the Royal Canadian Mint with the same terms as the big institutional clients. They are listed on the Toronto Stock Exchange in either Canadian or US dollars. The symbol is MNT for gold and MNS for silver. If you add a .U to the symbol, it is the same security, same amount of gold or silver, but trades in US dollars. We're known for innovation, so we have special technology to produce circulation coins, collector coins that have been very popular in recent years, especially during the pandemic. Collecting has become very popular. We have this innovation with the ETR. An ETF has daily creation and redemption, whereas an ETR, exchange traded receipt, we coined the term, has monthly redemption feature for physical gold and silver, and we will create new units from time to time through follow-on offerings. So it has more of a closed-end structure. Not only can you redeem it for physical gold or silver products from the Royal Canadian Mint, newly fabricated products, it's actually unique in that it's guaranteed by the Canadian federal government. There are no intermediaries between the investor and the metal. So there's no fund, it's just the Mint as custodian, and the Mint has been a custodian of precious metals since 1908.
Unlike many other gold-related investments, holding ETRs provides investors with direct ownership of gold bullion, held directly at the Royal Canadian Mint.
Coming up next,
we're really trying to find the most responsibly growing companies in the world. And we need to use ESG data in addition to financial data to find those companies.
And later in the show,
there's no limitations to what ETFs can provide exposure to with the simple click of a button.
Not only does S&P Dow Jones offer some of the best known and widely licensed indices, they were also one of the first to embrace ESG principles.
S&P Dow Jones Indices is one of the world's leading providers of index-related data, research, and index solutions. And my particular area is around all things ESG. So that includes ESG indices as well as climate indices as well. And S&P has really been at the forefront of providing those index solutions for the past 20 years. So it goes back to when we launched the world's first ever sustainability index known as the Dow Jones Sustainability Index. That index today is really widely recognized as kind of the gold standard of sustainability for companies around the world. And we continuously have been evolving our indices as well as our data to ensure that we're really reaching a wide array of sustainability-minded investors. ESG is constantly evolving. Right? So the conversations I was having about ESG 5-10 years ago look quite different than they did today. And I'm quite sure the conversations I'm having in 5 to 10 years from now will again look quite different. But there's something very exciting about that, right? That the space is constantly evolving. As the data evolves, so as we're actually to get more granular around these issues of biodiversity or of DE&I, we're able to use those inputs into index construction so that ultimately investors have access, through an ETF or a mutual fund to those underlying index methodologies and strategies. So it's an exciting time. And again, I think we'll see many new types of index strategies that are encompassing kind of these new ESG frontiers over the next several years.
S&P Dow Jones is a pioneer in ESG indexing and remains a leader today, delivering state-of-the-art indices.
More and more consumers are looking for companies pushing the boundaries on green and clean innovation. The ESG conversation is now unavoidable, much to Honeytree's liking.
Our job at Honeytree is to find the most responsibly growing companies in the world, and we define that as stakeholder-governed, purpose-driven companies who understand that they make money because of the positive impact they make on their stakeholders. Because of the way data has changed in the last 5 to 10 years and access to data, and it's not the investment industry driving this is the corporations. When you look at ESG metrics across industries, the investment industry is behind. The standardization of the reporting has finally allowed the investment industry to have, we'll call it, more real conversations about it, right? As opposed to it being in very specific, ESG-focused institutional allocators and ESG-focused teams. Now it's not a conversation anybody can escape. We're really trying to find the most responsibly growing companies in the world. And we need to use ESG data in addition to financial data to find those companies.
Honeytree believes it can deliver on its strong corporate accountability guidelines.
Before the break, two representatives from DB Wyatt and Associates shared their thoughts on the appropriate direction to take during a down market.
On the current market, don't get scared. This isn't the first go around. We've seen problems happen, but it's one of those things that you want to take a look at and find the best opportunities, the best things to take a look at. There are sales on, and it's a good starting point to get into the market for a longer term perspective.
If you're going to bulletproof your portfolio, you're going to start out with a good strategic asset allocation mix. There should be no one size fits all. You shouldn't have a cookie cutter portfolio. It should be catered to where you are in your life, your goals and your needs. And now is the time to be packing in to your growth sectors, to those down markets, because you're going to reap the benefits down the road of that dollar cost averaging.
Coming up next.
Pricing is better. They're much more efficient than some of the traditional methods of investing.
What proves the company's track record? Most would say time. AGF Investments has been managing assets for over 50 years, thanks to their continued innovative approach.
AGF is an asset management company and one of the longest standing independent companies in Canada. We invest thematically, and what we're trying to do, find companies that are in alignment with big changes that we're seeing in society. So as an example, we've been investing in solutions to climate issues for over 20 years. And so that might be electrification and transport. So we've had early investments in that whole supply chain over the last 20 years. And so every one of the companies is in alignment with that opportunity. And societal pressure, regulation, technology, all of those factors will only improve the opportunities that these companies are seeking out.
There's lots of really neat, sophisticated strategies that are now getting bundled in ETF form that, say, 5-10 years ago, they were only available to sophisticated investors. Types of strategies where you need a margin account, you need to be able to post collateral, all those things, we've kind of democratized that and put a ticker on it. So it's a good time, I think, for investors. They can add some really neat strategies that they couldn't have done previously.
AGF Insights with topics like China, sustainability, and gold strategies can be found on their website.
Before we go, some closing thoughts from Steve Hawkins of Horizons ETFs, who believes that it's versatility that has made this investment vehicle so popular.
There's no limitations to what ETFs can provide exposure to. If somebody wants to get in and out of an asset class or to different themes or sectors or broad market, they can get in and out of those exposures with the simple click of a button in their self-directed account or through their ETF trading desk or through any other means with one simple click.
The ETF industry continues to grow. It's a much more efficient way to invest. It has ongoing trading values. Pricing is better. They're much more efficient than some of the traditional methods of investing. Being a long-term investor in this industry, I've seen a tremendous amount of change from not only sort of a compression of fee structures, but also just more access to public markets for individual investors. And I think that's all good. A very good positive for things long-term.
Our hope is that you garnered enough intel today to help you navigate the ETF investing landscape.
Exchange-traded funds are exploding, having grown from around $200 billion in 2003 to over $10 trillion last year.
ETFs should not be overlooked in your investment portfolio. Thanks for joining us today. For BTV, I'm Jessica Kachachak.
And I'm Taylor Tone. You can follow us on Twitter. We're at BTV CEO Clips. And until next time, may your portfolio prosper. Don't forget to like and subscribe and ring the bell. Meet the CEO before you invest. Watch CEO Clips. Watch more of our BTV videos here